ExamPrep.School. Massachusetts Advisor's Exam for Life Insurance, exam code SERIES 16-55. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Annuities. Federal tax considerations for life insurance and annuities. General insurance. Insurance regulation. Life insurance basics. Life insurance policies. Life insurance policy provisions, options, and riders. Qualified plans. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. According to Massachusetts General Laws, Chapter 175, Section 162R, which of the following best defines an insurance advisor? A. A person who solely delivers insurance policies to clients without providing advice. B. A person employed by an insurer to assess risk and underwrite policies. C. A person licensed to sell insurance products and earns commission on sales. D. A person who receives compensation to evaluate insurance needs and recommend policy changes. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. This option accurately reflects that under MGLC.175, Section 162R, an insurance advisor provides advice or counsel regarding insurance for compensation. Reason A is not correct. Simply delivering policies does not involve giving advice, which is central to the advisor definition. Reason B is not correct. An underwriter is employed by an insurer and does not provide advice to policyholders. Reason C is not correct. Selling insurance for commission describes an agent, not an advisor who gives counsel for a fee. Question 2. Which of the following is a required eligibility criterion for obtaining a Massachusetts resident insurance advisor license? A. Having held an insurance license in another state for at least 2 years. B. Completing 100 hours of Massachusetts-specific insurance law coursework prior to application. C. Possessing a bachelor's degree in finance or related field. D. Maintaining a principal place of residence in Massachusetts at time of application. The correct answer is D. Massachusetts requires that a resident applicant actually reside in the state when applying for a resident advisor license. Reason A is not correct. Length of prior licensing in another state is not required for a resident license. Reason B is not correct. Pre-licensing coursework requirements relate to continuing education, not initial eligibility. Reason C is not correct. No college degree is mandated to qualify as a resident advisor applicant. Question 3. Under Massachusetts reciprocity rules, a non-resident seeking an insurance advisor licensed by reciprocity must meet which of the following conditions? A. Holding an equivalent license in the home state and maintaining it in good standing. B. Passing the Massachusetts-specific advisor examination in addition to home state requirements. C. Establishing a physical office location in Massachusetts. D. Submitting letters of endorsement from 2 Massachusetts residents. The correct answer is A. Reciprocity in Massachusetts requires a non-resident to hold and maintain an equivalent advisor license in their home jurisdiction in good standing. Reason B is not correct. Massachusetts does not require non-residents to retake the advisor exam when reciprocity applies. Reason C is not correct. A physical office in Massachusetts is not required for non-resident reciprocity applicants. Reason D is not correct. Endorsement letters from residents are not part of the reciprocity application process. Question 4. Which of the following is a disqualifying factor under Massachusetts character standards for an insurance advisor license applicant? A. A conviction for a non-insurance related felony more than 15 years ago. B. A speeding ticket received 6 months prior to application. C. Failure to submit required fingerprint impressions for background check. D. Having held residency outside Massachusetts in the last 5 years. The correct answer is C. Massachusetts requires fingerprint submission for criminal history checks. Failing to provide them disqualifies the applicant. Reason A is not correct. An old felony conviction beyond statutory limit may not automatically disqualify under character standards. Reason B is not correct. Minor traffic violations are not considered disqualifying under advisor character rules. Reason D is not correct. Prior out-of-state residency does not affect character standards for licensure. Question 5. Which form and fee must accompany an initial Massachusetts Insurance Advisor license application? A. Uniform application for individual producer license, Form IND16, and a $50 initial license fee. B. Uniform application for individual producer license, Form IND16, and $150 initial license fee. C. Uniform application for business entity license, Form B2, and a $50 initial license fee. D. Electronic online advisor application with no fee for first-time applicants. The correct answer is A. Initial applications must use the individual producer license form and include the standard $50 fee. Reason B is not correct. The fee for an initial license is $50, not $150. Reason C is not correct. The business entity form is for firms, not individual advisors. Reason D is not correct. A fee is required for first-time advisor applications. There is no fee waiver. Question 6. Under Massachusetts regulations, a supervising producer who sponsors an insurance advisor must fulfill which obligation? A. Notify the Division of Insurance of the sponsorship appointment within 30 days. B. Conduct quarterly audits of the sponsored advisor's client files for compliance. C. Guarantee the sponsored advisor's compliance with all federal tax reporting. D. Retain all copies of the advisor's continuing education credits permanently. The correct answer is A. Supervising producers must file notice of sponsorship appointment with the division within 30 days under MGLC 175, Section 162 seconds. Reason B is not correct. No quarterly audit requirement exists under Massachusetts sponsorship rules. Reason C is not correct. Federal tax reporting is not the supervising producer's obligation when sponsoring. Reason D is not correct. Continuing education records retention is governed by the advisor, not the supervisor. Question 7. Regulated advisor Jane Smith plans to operate under the trade name Smith Wealth Advisors in Massachusetts. Under state regulations, what must Jane Smith do before using this assumed name in her advisory practice? A. File an assumed name certificate with the Massachusetts Secretary of State and register the trade name with the Division of Insurance. B. Submit a written notice to each insurer with which the advisor is appointed listing the new trade name. C. Obtain a separate advisor license under the trade name by submitting a new application and fee. D. Register the trade name with the U.S. Patent and Trademark Office prior to any state filing. The correct answer is A. The advisor must both file an assumed name DBA certificate with the Secretary of State and separately register the assumed or trade name with the Massachusetts Division of Insurance before using it in business. Reason B is not correct. This is incorrect because Massachusetts insurance regulations focus on filings with the Secretary of State and Division of Insurance rather than notifying each insurer. Reason C is not correct. This is incorrect because the existing license is amended by registering the trade name, not by obtaining a separate license under the assumed name. Reason D is not correct. This is incorrect because federal trademark registration is not required under Massachusetts insurance licensing rules for using an assumed name. Question 8. Which action exemplifies the Massachusetts Commissioner of Insurance's general supervisory authority over insurers? A. Setting minimum experience requirements for producer licensing. B. Requiring a domestic insurer to submit consolidated quarterly and annual financial statements. C. Conducting written suitability examinations for individual policy owners. D. Prescribing policyholder dividends for participating life insurers. The correct answer is B. The Commissioner's general supervisory authority includes requiring insurers to file financial reports. Licensing standards, individual policy owner exams, and dividend prescriptions fall under separate statutory provisions and do not reflect general supervisory authority. Reason A is not correct. Experience requirements for producers are established under licensing statutes, not general supervisory powers over insurers. Reason C is not correct. Suitability exams for policy owners are not part of insurer oversight. They relate to producer conduct and suitability rules. Reason D is not correct. Dividend determinations for participating policies are governed by policy provisions and actuarial guidelines, not general supervisory authority. Question 9. Under Massachusetts insurance law, at what minimum interval must the Commissioner conduct a full-scope financial examination of a domestic insurer? A. Every 3 calendar years. B. Every 10 calendar years. C. Every 7 calendar years. D. Every 5 calendar years. The correct answer is D. Massachusetts law mandates a full-scope financial examination of each domestic insurer at least once every 5 calendar years. Other intervals are not consistent with statutory requirements. Reason A is not correct. 3-year intervals are not specified in Massachusetts statutes for full-scope financial exams. Reason B is not correct. 10-year intervals are too long and conflict with the requirement for exams every 5 years. Reason C is not correct. 7-year intervals exceed the statutory maximum period between examinations. Question 10. Under Massachusetts law, revocation of an insurer's certificate of authority may be based on which condition? A. Refusal to adopt NAIC model regulations verbatim. B. Filing policy rate manuals that result in zero premium. C. Failure to maintain required minimum capital and surplus levels. D. Failing to replace licensed producers who change business addresses. The correct answer is C. An insurer's certificate may be revoked if it fails to maintain statutory capital and surplus requirements. Filing rate manuals with zero premium, refusing model regs, or producer replacements are not grounds for revocation. Reason A is not correct. Model regulations guide uniformity, but refusal to adopt them. Verbatim does not alone lead to revocation. Reason B is not correct. Submitting rate manuals with zero premiums would trigger rate review issues, not certificate revocation. Reason D is not correct. Producer administrative compliance, such as address updates, does not constitute revocation grounds. Question 11. Under Massachusetts regulations, which statement accurately describes the approval process for life insurance policy forms? A. Forms require a minimum 60-day prior filing, but may be issued pending the outcome of review. B. Companies may implement forms immediately after filing, subject to potential disapproval within 15 days. C. Forms must be filed at least 30 days before use and cannot be marketed until Commissioner approval. D. Policy forms may be filed and used at the same time, with any approval granted retroactively. The correct answer is C. Massachusetts requires life insurance policy forms to be filed at least 30 days before use and prohibits marketing until the Commissioner grants approval. The other models describe file and use or use and file regimes not adopted in Massachusetts. Reason A is not correct. A 60-day prior filing with pending use is not consistent with the 30-day prior approval requirement. Reason B is not correct. Use upon filing with 15-day disapproval is a file and use system not used for life forms in Massachusetts. Reason D is not correct. Concurrent filing and use with retroactive approval is not permitted under Massachusetts law. Question 12. A Massachusetts life insurer submits a proposed new whole life premium rate schedule to the state regulator. Under Massachusetts requirements for filing and approval of life insurance rates, which of the following must accompany the rate filing? A. Illustrative examples of policy performance showing both guaranteed and non-guaranteed values under the proposed rates. B. An actuarial memorandum describing the assumptions and methodology used to develop the proposed premium rates. C. A demographic analysis of the insurer's current policyholder mortality and expense experience. D. Copies of the sample policy forms and riders to which the proposed rates will apply. The correct answer is B. The correct answer is an actuarial memorandum because regulators require detailed documentation of the assumptions and methodology to justify that proposed rates are adequate and not excessive. Reason A is not correct. Illustrative policy performance examples are used for policy disclosures and are not mandatory in the rate filing itself. Reason C is not correct. A demographic analysis may inform internal rate development, but is not a required submission for regulatory approval. Reason D is not correct. Policy forms and riders are filed separately under form, filing procedures, and are not part of the rate filing. Question 13. Which of the following best describes the purpose of the Fair Credit Reporting Act as it relates to insurance underwriting? A. To mandate uniform credit score, thresholds for insurance coverage eligibility. B. To require insurers to submit consumer credit information to a centralized federal repository. C. To restrict the use of criminal history records by insurers in underwriting decisions. D. To promote accuracy, fairness, and consumer privacy in credit reporting used for insurance underwriting. The correct answer is D. The Fair Credit Reporting Act seeks to ensure consumer credit information used in underwriting is accurate, fair, and kept private, rather than creating central databases or restricting non-credit data. Reason A is not correct. The Act does not establish credit score thresholds for policy eligibility. Reason B is not correct. The Act does not require insurers to provide credit data to a federal repository, but regulates how consumer reporting agencies operate. Reason C is not correct. The Act governs credit reporting, not the use of criminal history records in underwriting. Question 14. Under the Fair Credit Reporting Act, a consumer who requests an investigative consumer report is entitled to which of the following disclosures? A. A free written copy of all underlying source documents and evidence collected during the investigation. B. A written disclosure of the report's nature and scope, plus a summary of consumer rights. C. An oral summary of investigative findings provided by the reporting agency without any written notice. D. A requirement that any inaccurate or unverifiable information be deleted at no charge to the consumer. The correct answer is B. The Act requires that consumers requesting an investigative report receive a written disclosure describing its nature and scope, along with a summary of their rights, not full documents or oral-only summaries. Reason A is not correct. There is no requirement to provide all underlying source documents upon request. Reason C is not correct. An oral summary alone does not satisfy the Act's written disclosure requirement. Reason D is not correct. The Act provides dispute and correction rights but does not mandate automatic deletion at no cost. Question 15. An insurance producer in Massachusetts wants to review the credit report of a prospective annuity applicant. Under the Fair Credit Reporting Act, what must the producer obtain from the applicant before requesting the report? A. a dated written authorization that specifies that the report will be used for underwriting and includes a clear disclosure of the company's intent to obtain the report. B, a telephone recorded statement from the applicant granting permission to obtain the report and a subsequent written disclosure before ordering. C, a general signed release form authorizing any inquiries into the applicant's financial history without specifying purpose. D, a liability waiver signed by the applicant releasing the insurer from responsibility plus notice of adverse action rights. The correct answer is A. The Fair Credit Reporting Act requires a standalone, dated written disclosure and authorization from the consumer that specifies the permissible purpose before obtaining a consumer report. Reason B is not correct. Oral permission does not satisfy the FCRA requirement that authorization be an assigned written document before obtaining the report. Reason C is not correct. A release form must clearly state the permissible purpose. A general release without specifying purpose is insufficient. Reason D is not correct. A liability waiver is not required and does not fulfill the FCRA's need for a written disclosure specifying intent to obtain a report. Question 16. Which of the following best defines pure risk in the context of insurance? A, a risk arising from intentional actions that alter the likelihood of a loss event. B, a risk that allows for outcomes including profit, loss, or no change in value. C, a risk that involves only the possibility of loss or no loss with no chance of gain. D, a risk stemming from environmental or physical hazards subject to scientific uncertainty. The correct answer is C. Pure risk is characterized by the possibility of loss or no loss only. Gains are not an outcome under pure risk, distinguishing it from other risk types. Reason A is not correct. This refers to moral hazard, where actions influence loss likelihood rather than the fundamental risk classification. Reason B is not correct. This describes speculative risk, which includes potential gains as well as losses or no change. Reason D is not correct. This defines a physical hazard, not the nature of pure risk outcomes. Question 17. Which of the following distinguishes speculative risk from pure risk in an insurance context? A, speculative risk arises solely from natural perils, while pure risk is associated with financial ventures. B, speculative risk includes the opportunity for financial gain, whereas pure risk does not offer any gain potential. C, speculative risk has predictable frequency and severity, whereas pure risk outcomes are inherently unpredictable. D, speculative risk is statutorily uninsurable, while pure risk can only be transferred through standard policies. The correct answer is B. Speculative risk involves potential outcomes of gain, loss, or neither, whereas pure risk involves only loss or no loss, making gain impossible. Reason A is not correct. This incorrectly swaps the sources of pure and speculative risk. Reason C is not correct. Speculative risk is not defined by predictable metrics. Both risk types can have varied predictability. Reason D is not correct. Pure risk, rather than speculative risk, is typically insurable under standard policies. Question 18. In life insurance underwriting, the term exposure unit most commonly refers to which of the following? A, the standard mortality rate used in individual policy pricing. B, the probability of death within a policy year for a particular group. C, a $1,000 increment of life insurance coverage on a single life. D, an insured's actuarial age at the time a policy is issued. The correct answer is C. An exposure unit is the basic measurement used to quantify risk in life insurance, typically defined as each individual life for each $1,000 of coverage. Reason A is not correct. This refers to a pricing factor, not the exposure unit measurement. Reason B is not correct. This describes a mortality rate, not the unit of risk exposure. Reason D is not correct. This defines an insured's age, not the coverage-based exposure unit. Question 19. A gallery owner purchases fine art insurance for a new exhibit. After the policy is issued, the owner begins leaving valuable paintings unsecured overnight and positions art near easily accessible doors, showing less concern for potential loss. Which type of hazard is illustrated by the owner's behavior? A. Moral hazard. B. Physical hazard. C. Moral hazard. D. Legal hazard. The correct answer is C. The correct answer is moral hazard because it involves a policyholder's change in attitude or carelessness once coverage is in place, increasing the chance of loss. Reason A is not correct. Describes deliberate dishonesty or fraud, which is not the case when the owner simply becomes careless. Reason B is not correct. Pertains to a physical condition or characteristic that increases loss likelihood, not an attitude change. Reason D is not correct. Relates to laws or regulations affecting risk, which is unrelated to the owner's negligent behavior. Question 20. Which capital raising method is unique to stock insurers compared to mutual insurers? A. Issuing non-voting membership certificates to policyholders. B. Selling transferable shares of stock to investors. C. Assessing policyholders for additional reserve contributions. D. Distributing non-guaranteed surplus dividends to contract holders. The correct answer is B. Stock insurers raise capital by selling shares of stock to investors, whereas mutual insurers rely on policyholder contributions and surplus to finance operations. Reason A is not correct. Issuing membership certificates is a feature of some fraternal organizations, not a capital-raising mechanism for stock insurers. Reason C is not correct. Assessments of policyholders for reserves occur in mutual insurers when additional funds are needed. Reason D is not correct. Distributing non-guaranteed surplus dividends is common in mutual insurers, not unique to stock insurers. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.